Tesla rebounding here. Although, can we call it a rebound? Just slightly. After shares fell below $700 for the first time since August, as COVID disruptions at the company's China Gigafactory continue to weigh on the stock. The Shanghai location accounts for roughly half of the EV maker's vehicle production. The car maker is down more than 30% this year.
In this video, stocks rebound for now, new developments in Elon Musk's Twitter deal, a huge statement from Elon Musk that every Tesla stock investor needs to understand, and some thoughts on Tesla stock under $750 per share. Bargain of the century, further to fall, or both? So let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon, and investment themed merch in the merch store, so check out the links in the pinned comment below, and thanks for your support. First up, Tesla stock today closing at $728 per share, putting Tesla's market cap at around $750 billion. As I tweeted overnight, I'm getting very strong May 2019 vibes. Now, if you haven't been invested in Tesla stock particularly long, you haven't been paying attention, allow me to remind you what happened in May 2019. Tesla stock as low as $37 per share. Obviously, split adjusted. Reminder, today we're at 728. In other words, Tesla stock has done approximately a 20x increase since May 2019. Believe it or not, that isn't the depth of my analysis here. I'm not saying, oh, Tesla was down once and now it's up. But I do want to make clear that I believe we're in a similar situation to that point in time. Peak fear, peak concern, peak emotions overtaking logical faculties. The market is completely irrational at this point in time, in my opinion. Tesla stock, massively underpriced. I can't stay quiet. I can't not say this. Of course, I could be wrong. Obviously, not investment advice, but I'm here to share my thoughts, opinions, and ideas and my own investment decisions. Now, I want to just zoom in a little bit. We're going to switch to a logarithmic scale here. If you don't understand what that is, it increases exponentially, makes things a little bit easier to see visually. This is the May 2019 dip. Months earlier, Tesla stock trading almost twice the price. That's right, a fall of about 50% from late 2018 into 2019, but more context matters. In 2014, okay, literally we can see on the chart here, in 2014, Tesla stock over $50 per share. Tesla continued to execute, yet the stock violently swinging up and down, but effectively going nowhere. In 2015, we've got Tesla stock trading at $56 per share. 2016, we're at $50 per share. In 2017, we're around $75 per share. This continues. 2018, Tesla stock $65-ish per share, peaking over $75 per share, then falling off a cliff, then suddenly, out of absolutely nowhere, after, in my opinion, going obviously the wrong direction for a period of time, making absolutely no sense, completely detached from the company's fundamentals and their future cash flows, the stock market goes, oh, shit. You know what, we f***ed up, we were wrong. Tesla's worth a lot more than everyone's been paying for it, let's buy it now. And then, of course, literally to the moon, a 20x from that point in time. And yes, for the record, I was buying in May 2019. I mean, I've been buying the whole time, but literally May 2019 is the point where I'm like, you know what, that safety net, all the cash that I took before I retired as a safety net, it's going all in Tesla. I do put my money where my mouth is. I feel like we have a similar setup today. A ton of factors affecting the price of Tesla stock that have nothing to do with their execution whatsoever. Fear, panic, uncertainty in the stock market, investors fleeing from growth assets, everything getting absolutely crushed. The short story is I don't believe this irrational disconnect will last forever. Tesla stock is down close to 50% from its all-time highs. It seems like many Tesla bulls are noticing the same thing. Here's a tweet from Gary Black, quote, Tesla stock too cheap after falling around 36% in the past 3 weeks. At $720 per share, Tesla's 2022 PE based on Gary's estimates based on $12.40 of EPS is 58 times. 23 at 36 times. And importantly, Tesla PE, lowest since 2020 COVID peak. You know, peak fear, everyone thought the world was ending, you remember that? Yeah, I sure do. There was a guy on YouTube saying, well, I'm buying, you guys can panic and sell and I'll see in a few years' time. Aged well, as I suspect this video will. Despite ever-increasing EPS estimates, Black pointing out there that 2022 year-to-date EPS estimates have increased by 38%, 23 estimates by 31%, and they've still got a long way to go. See this here visually. Long story short, in short, The lower the yellow, the lower the multiple, the better the deal, in my opinion. Black continues. Tesla's being driven by the macro environment. Absolutely spot on. Again, things that don't have anything to do with Tesla business. And bear arguments don't hold water. What's new? Q2 street earnings per share estimate of $2.30 seems achievable. Understatement. Bitcoin impairment will be excluded by investors, obviously. Shanghai production ramping up quickly again. And the Twitter deal is asymmetric. Either the deal closes or Elon walks away, and Gary Black estimates Tesla would be up about 10% on that news. As they say, picture's worth 1,000 words. I think this one's worth even more. What we're looking at here, Tesla EPS estimates for 2022 versus Tesla stock price. You'll note over time there tends to be a correlation here. Occasionally Tesla stock price ahead of estimates, keeping in mind these are consensus estimates, in Wall Street for, I don't know, the last 5, 6, 7, 8, 9 years, massively underestimating Tesla quarter after quarter. This isn't a guide of what Tesla does, it's what Wall Street thinks Tesla will do. Very occasionally there'll be a disconnect. For most of this chart, going back to 2020, Tesla stock price well ahead of EPS estimates. But note, the huge disconnect that has recently occurred. EPS estimates have gone vertical. I mean, look at this thing, right? Red, literally gone vertical. Where else have we seen such a sharp increase in EPS on this chart? Spoiler alert, nowhere. And at the same time, Tesla's stock price here in white falling off a cliff. I guess what I'm trying to say is, don't say I didn't warn you. But now, an important update to Elon Musk's Twitter bid.
Then, one stock to watch, Tesla. Elon Musk is looking to drop a Tesla margin loan altogether as he tries to secure $6 billion in preferred equity to buy Twitter. Now, joining us with the latest is Bloomberg's Ed Ludlow. This would be quite astonishing because this would go from like a $12 billion margin loan to nothing.
Yeah, I mean, it's according to sources, $6 billion in new equity financing. You'll remember he only just did $7.1 billion of new equity financing last week, which cut the margin loan from 12.5 billion to 6.25 billion. This is de-risking, right, guys? It's de-risking for everyone. Think about how much of Elon Musk's net worth is Tesla holdings that are collateralized so that he can borrow, right? He's always joked about being cash poor, and so he's borrowed from the banks against the value of that Tesla stock to make things happen for himself, and he's kind of doing the same with this deal.
What do we know about the terms of the equity side?
Yeah, it's interesting. I mean, not just the terms, but who. We don't have any names on this latest $6 billion tranche. The preferred equity may have a 20-year maturity, according to sources that have told us about this deal, and allowing interest to be paid in kind at a rate of 14%. Seems like Musk is doing a bit of work to make this attractive still, right? You think about the names he has secured. If he needs more preferential equity to be brought in, who is he going to be talking to? Morgan Stanley, according to sources, are out there trying to broker some interest. Who comes in?
So this is an important update that should put many Tesla stock investors at ease, assuming Elon is able to secure the additional financing and no longer require any margin at all. In other words, to have borrowed any money against his Tesla stock. Of course, this is entirely unsurprising. As I tweeted on the 5th of May, by the way, with Elon back in this deal, I would expect a lot of big money will want in. This $10 billion could grow considerably. The Elon fact was real, 10 out of 10 track record. This was after news broke that Elon may be securing up to $10 billion in financing for the deal. It's pretty simple, ladies and gentlemen. Elon plans to buy Twitter. Elon has a great track record of problem solving, but also value creation in the private and public markets. Now, many investors go, wait, you seriously? I'd get a piece of Elon's latest venture? They've seen a plan, I think, to triple the value of the company within about 5 to 8 years. Many investors are scrambling for this opportunity. I won't at all be surprised if we see Elon no longer need any margin whatsoever. As Elon said back in 1999, raising capital is simply a matter of making a few phone calls, and Elon's obviously been on the phone. Actually, to be honest, I think people have been calling him. How times change. And now onto an extremely, and I mean extremely important point for Tesla stock investors. A recent comment from Elon Musk with huge, and I mean huge, in fact colossal, what's bigger than colossal? Gargantuan, galactic implications. So here's a tweet from some random guy on Twitter with 3 first names who has recently been in Twitter jail and may finally be out. Not counting my chickens before they hatch, but it seems it is possible now that my tweets are reaching people that aren't currently following me and or don't have very close ties to my account, e.g. they regularly reply to my comments and so on. P.S. Fuck you, Twitter. So let's read this tweet. Interesting comments from Elon Musk in the Financial Times interview. Casually mentions if Earth's economy was 10 times larger, hello Tesla bot, you could still power the entire thing on solar, wind, batteries and electric transport. And this is not news to anyone who's done the math. This random guy following up, but most have not done the math. Also, most do not think Tesla is serious about or has a chance at massively expanding the global economy by massively expanding useful labor via increasingly intelligent humanoid robots. And then some guy called Elon Musk responded to this, literally true. Even 100x is possible. Spoiler alert, so is 1,000, but let's not get too far ahead of ourselves. I just want to emphasize this because it actually matters a lot. When Elon talks casually in an interview about, oh, you could power the entire economy even if it was 10 times larger, he's thinking Tesla bot. It's not just a throwaway comment here. Tesla has a publicly stated goal of massively expanding the global labor market via Tesla bot. They're not f***ing around, and the math checks out. I know to many, Tesla bot seems off in the distance, and it is going to take many years before these things contribute meaningfully at a large scale, in my opinion. But the most important thing to understand here is Tesla already has the foundational building block for intelligent humanoid robots. Not only the foundational building block, Tesla has almost solved vision, perception, planning, and action. First in vehicles, next in the bot. Obviously, the bot learns via fleet learning, just like Tesla vehicles, blah, blah, blah. But no one's going to be able to catch up on this fundamental core element of real-world AI. It's already a done deal, and I know, calm down. There's still challenges along the way, but without unforeseen circumstances, and I mean just absolutely incredibly unlikely circumstances, it's just a matter of time before Tesla's dominating humanoid robots like they're dominating electric vehicles, which are the only kind of vehicles that matter in the future. And the implications for Tesla stock investors here are absolutely fucking ridiculous. Absurd. No, seriously. Absurd. So here's something I've whipped up, modified version from my Tesla valuation model. These assumptions are just for example's sake, and don't worry, I'll zoom in a little bit. I just want to give you guys and girls a sense of the potential impact of Tesla successfully developing a useful, increasingly intelligent humanoid robot. Key assumptions here, and I want to be clear, these aren't predictions, it's just here's some numbers and we can use. Okay, what if we use these numbers? Let's just say that Tesla sells the hardware for the Tesla bot at $25,000 a pop. Over time, this may come down further, but let's just use a static number. Let's assume a 25% gross margin on the hardware. Remember, Tesla's automotive margins today are around 30%, so I believe this is very conservative. But the hardware sales aren't really the kicker. The kicker is the monthly artificial general intelligence subscription, aka full self-driving subscription. Yep, you're going to have the same thing for your Tesla bot. I suspect this is massively underpriced. I think this will increase enormously over time as the utility increases, but again, let's be very conservative. And I'll assume a gross margin on the monthly subscription to AGI of 85% because there's not a huge amount of additional cost. This is very high margin software. So let's look at some of the implications here. Let's just say hypothetically, Tesla sells 5,000 bots in 2025. All the assumptions you've already seen. Total gross profit about $40 million or so. Big fucking deal. But if Tesla continues to scale up production, increase the size of their bot fleet, meaning increase the number of subscribers who are paying for their AGI, not just from that year from those bot sales, but every year previously as well, because a bot without the AGI subscription, completely useless, unless you're into doing things with humanoid forms when nobody's looking, in which case, go for your life. But if it needs to be intelligent and useful, you'll need to be paying for an ongoing monthly subscription to get Tesla's artificial general intelligence, AGI software. If you want to pause, feel free. I'm just going to skip to the point. The kicker here, right? Let's just say hypothetically, I know it's crazy, but let's just say that Tesla gets at some point in the future to 100 million bots produced in a single year. Remember, 10xing the global economy today. Think about how many people are currently in the labor market, a few billion people, not including children. If Tesla were to add 100 million Tesla bots to the global labor force, let's say arbitrarily in 2044, pick your own date, and they did so at this type of rate, the total fleet of Tesla bots would be less than 500 million. We're not even getting close to 10x the global economy unless these things are like 10 times as useful as humans. At some point they'll get there too, but let's not get too confused or complicated here. The point is, the total gross profit from hardware sales plus subscriptions to Tesla's monthly AGI software, we're looking at about $1.5 trillion of profit in a single year. Do you understand? Now, some of you probably don't, so let me just be real clear here, okay? Tesla intends on massively expanding the size of the global economy via Tesla bot. They may fail, but if they don't, in order to massively expand the global economy, Tesla is literally going to need to make hundreds of millions, and I mean literally hundreds of millions of humanoid robots. Should they achieve this goal? These are the kind of numbers we're talking about. So what if we modify a few of these numbers? Let's just do an absolutely ridiculous case because, hey, why the f not? Again, this is just an example, so don't get your panties in a twist, but I'm trying to illustrate the point because I don't think most investors, people just can't wrap their brain around it. I don't know how else to say it. Let's just say that at some distant point in the future, Tesla produces 500 million bots in a single year. No, relax. Just an example. Let's say everything else remains the same. We're now looking at a potential profit of around $5 trillion in a single year at whatever arbitrary date in the future you want to use. Maybe it's further out, maybe it's around 2069. Hopefully you're still alive then and healthy. These numbers absolutely dwarf anything else in Tesla's business. Transportation, energy, storage, you know it, nothing. They're a speck compared to the potential of Tesla bot. The thing to understand here, it's not about cost. I know these numbers sound a little bit insane to some people. It's about value. If Tesla is successful in creating a useful humanoid robot that doesn't get distracted, doesn't hit on Sally, that can do 2 or 3 back-to-back shifts in a single day, reaches human level intelligence and then goes beyond human level intelligence, and then eventually can be 2, 3, 5, 10 times as effective and efficient as a human and work 2 to 3 times as much, these things in a single year may be able to contribute $1 million+ of value to the global economy. At that point in time, if you're a business, if you've got the option of buying these things for, let's say, anything less than $1 million, and you firmly believe that it's going to add more than $1 million of value to your business, it's a no-brainer. That's the whole point. Tesla's going to make bots that initially are maybe a no-brainer for a few manufacturing companies, then eventually become a no-brainer for every company and then every household on the planet. This is why Elon Musk has wondered out loud, is there a limit to the size of the global economy? Maybe not. The more bots, the more useful labor, the more value, the more economic activity, the larger the global economy. This is where things are headed. Again, not a prediction, I'm just using some example numbers, use your own. I'm trying to make a point, not a prediction, but I want to make sure that every Tesla stock investor understands. The Tesla bot opportunity, probably 100, 1000x bigger than everything Tesla's already going after. I'm not even kidding. This is why when Elon Musk in an interview makes a passing comment about increasing the economy by 10 times, you have to think, wait, why would he even say that? Like, Tesla bot. I hope I've made my point clear. And now from one extreme to the other, from an insane Tesla bull who's talking about humanoid robots, what an idiot this guy must be high, no comment, to an investment manager or something like that, sorry, didn't pay attention, can't be bothered checking now, who shares some interesting thoughts about Tesla stock and maybe even compares Tesla's valuation to a legacy automotive manufacturer. Just wanted to provide some contrast. Insane Tesla fanboy thinks over the long term, Tesla bots could literally 10x, 100x, I'm gonna say it, maybe even 1000x Tesla's market cap, to somebody who thinks like most folks on Wall Street.
So we think about Tesla, it's no longer a trillion dollar company, but let's use a trillion because it sounds more impressive in this argument. Just call it a trillion to add the arithmetic here. So we own, you mentioned BMW. Now Tesla makes about 1 million cars and BMW makes about 2.5 million cars, let's say. So that's already, BMW's been around for a long time, makes X many cars. Tesla makes about a third of that. BMW, you can buy the whole company, all its history, all its manufacturing prowess and capability for around 50 billion. And you would have to pay for almost 40% of that manufacturing, 20 times more, right? $1 trillion. So for $1 trillion, I can buy 20 BMW companies. Now,
but when you look wait a second, when you look at BMW and they're trying to push into the EVs, right? And they're looking at, say, 2 million by 2025. For Tesla, you're buying 10 million by 2025. So is the ICE engines, you're buying this old technology?
Absolutely. You've hit the nail on the head. That is the question. Will it be 10 million? Will it be 5? Will it be 20? I mean, you can go back and just figure out what the 10 million car figure means in terms of market share of EVs, and that would be quite unprecedented. I mean, I don't want to throw out parallels to the early cars, having 50% market share of 40%. I just don't see it happening. I just think these guys are all these other competitors will innovate. Ultimately, yes, it is a complex system. But it's not an internal combustion engine, which has, thousands of moving parts. This has many less moving parts. The software, from what I'm, thinking and understanding from the companies, isn't to the level that you think there's a 10-year lead or something like that. These guys will catch up, the other competitors. And there's already, by the way, EVs out there that outsell practically Tesla, it's lower priced EVs. So I just don't see Tesla being as dominant, but that's just our view. And for you to buy Tesla now, you have to really believe that. And that's the thing. We don't want to have to believe anything that's so kind of, in our view, somewhat unprecedented in that industry. So there's easier ways to play it.
So what's happening today? Stocks rebounding, including Tesla stock. Let me know in the comments below if you guys and girls think we have further to fall. Have you been buying the dip? Plus, big new development in Elon's Twitter deal. Not surprising, to be honest. It seems likely that Elon won't have any margin associated with his Tesla stock to complete this deal. Many investors with deep pockets joining the party. Who wouldn't want in on Elon's latest company? even if it is an acquisition. And yes, in my opinion, Tesla stock far and away the greatest risk-adjusted opportunity that I'm aware of in the stock market. Once again, please refer to my prior comments and ballpark numbers for Tesla bot. And if you want a little bit more detail, check out my Tesla stock price targets available exclusively on Patreon. Click the card in the corner or the link at the pinned comment to join. You'll also gain access to tons of exclusive content. My price targets will give you a bit of an indication of where I think Tesla stock may be going over the next decade. If you want to go a step further, you can access my Tesla valuation model at the investor supporter level and above. And in that, you'll be able to see the assumptions I actually have in my valuation model for Tesla bot throughout this decade. And no, they're not the same as the ones we saw in this video. How big do you think Tesla bot will be? I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.